Morning, everyone. Welcome to our Learn the Secrets to Competitive E&O Quotes webinar. My name is Anae Augustini. I'm CEO of CID Insurance Programs, and I'm going to be presenting our webinar along with Dan Mulligan, who's our professional liability underwriter. He's got at least 15 years experience in the professional lines arena, and so he will be a great source of information for you. And then Jacob Cole is a marketing specialist, and he is running our webinar as we speak. So he's here to take care of the back room needs. So let's get started. So let's get the logistics out of the way. Everyone's going to be on mute. There's it's hard. There's too many people for everyone to be talking at once, but you will obviously be able to hear. But we do love questions and or comments, and we will take those questions as we go along and stop and answer your questions as we go. So please feel free. Everyone will have a chance to see those questions in the chat room, and we'll make sure that we answer them for you. And then at the end, there'll be a short survey, and we really want your feedback. So I appreciate if you would take the survey and let us know what we can do better, and what we've done well. So here's our objectives for the webinar today. So we're going to cover some secrets to better understanding and successfully writing, errors and omissions insurance. And then we're going to use some claims examples as a means to help you better understand the E&O exposures that exist for professionals. And then let's talk about, there's a variety of eligible business classes, and some of them have different coverage needs. And so we're trying to communicate that through our claims examples today. So let's get started. All right, first of all, let's talk about what's the legal foundation of E&O claims. So in reality, we're talking about professional services rendered, right? This is someone who does offers professional services. Now, what are those? They're administrative in nature for the most part. And then there usually there would be an allegation of that of an economic nature. So the standard and that economic nature means that the damages alleged by a third party would be economic in nature. The standard of care is higher for a professional. So thus, at professional duty exists, that they are going to be held accountable for that, a higher standard of care. So the key, the most important thing for you guys to really understand relative when you're talking to an insured, you need to find out every activity that their business is doing in order to be able to not only cover, obviously you're going to write general liability, but you need to find out what other services. A lot of times a website will disclose things and tell you more than you're getting from the insured. But that's the art of writing professional, is to really find out what the business is doing and ask the question, in multiple different ways to gather whether they are providing professional services. That is changing a lot, and everyone is diversifying in their businesses to some extent, and they're always adding services that is hard for insurance brokers to be able to track, and that a lot of times involves a professional a duty. Okay. So why E&O? So E&O allegations, they can be devastating to a business. It's not just about a business owner making a mistake, because most business owners are not going to think they're going to make a mistake. We don't make mistakes is typically the mentality that and they don't even want to go there. They don't even want to buy the insurance because they feel like their company's not going to make a mistake. The problem with that theory is it's the allegation that you that is what is going to be the killer for that business owner who doesn't think they're going to make a mistake. It doesn't mean someone's not going to allege that they've made a mistake, and that becomes, and it's an allegation of negligence that they're going to make. So even the most conscientious professional can be susceptible to an allegation of negligence. So that's a great argument to use with your clients that don't think that they need any more than general liability coverage. And don't forget the defense. If someone's uninsured for that exposure, that cost alone to defend the case could deeply erode a company's financial stability. Last, general liability excludes professional services, and that and being able to explain to them, the professional services that they're providing, and the fact that that's not covered on a general liability policy is going to be super important. So let's talk about what is this policy form. So what makes it different? One of the things that you have to pay attention to is that it's a claims-made policy form, and a claims-made policy form. And by the way, all E&O policies are manuscript, and that means that the carriers are not boilerplate like property and general liability. They are manuscripts. So each carrier can file a different policy form. They can create it the way they want it, and thus you will find different scenarios in the industry that you have to pay attention to. But claims made, most E&O policies, I would say the majority of them are claims made forms, and that let's talk about what that is. It really means that the insured must report a claim during the policy period the insurance has knowledge of it. Okay? So I'm going to say that one more time. The insured must report a claim during the policy period the insured has knowledge of an incident or an allegation of negligence, of damages, right? So what typically gives rise to knowledge? So the key there is to remember that the majority of the forms for E&O, the large majority of them, but it's something that, and if you're working with Dan's always going to make sure that you've got a good form, but that form should require written notice and should not drop down to anything related to verbal knowledge. So if someone's verbally threatening you, you want a form that is, that requires written notice as that knowledge. And that this is something important to point out to your insureds and talk about, because they need to understand that. Dan, do you want to add anything to this?
Yeah, there's definitely a few things that you really want to remember there. A claims-made form, unlike an occurrence form, has a lot of reporting period restrictions. So you need to report it on the policy. Some policies say it's going to need to be reported on the same policy period, or once you're first aware of it. So when most terminology is saying when it's most practical there. So you need to, as soon as there's a claim, you need to let the carrier know that it's going to be at that, you're going to have to let the carrier know that there is a claim so they can adjust it. They're the ones on the hook for, the monies and so forth there. Also, being a claims-made policy, it's very important that there needs to be a continuity of policy there. When it's on an occurrence form, if there's a lapse of coverage, it's no big deal. But on a claims-made policy, you have to have the policy continue from policy A to policy period B with no lapses. Sometimes if there's a lapse of coverage, it can cause a retroactive date, which we're going to go into a little bit future, but it's imperative that you have the continuity of coverage on a claims-made policy form there. And then once again, most claims-made policy are going to be a written demand on most of the policies that we write there. So once there is a written demand from an attorney or a formal letter stating that we're going to sue you, you need to let the insurance carrier know so they can start adjusting the claim.
Thank you, Dan. That's important information to be aware of. So another aspect of E&O policies that you will not see on other types of policies is they deal with a retroactive date, okay? And this is another area that's really important to explain to your insured. And what the retroactive date is really the date that coverage begins. I just, they complicate it when they're trying to define it, but really for you as insurance brokers to explain it to your insured, it's really the date that their coverage begins. That can range from the inception date of the policy to full prior acts. And our next slide will deal with full prior acts, but Dan, you want to share anything on retroactive date?
Yeah, it's really important when going from one policy to the other. The most important thing, and the thing that I try to do on every policy, is to make sure that you don't lose retroactive date when moving from one policy to the other there, because if you do, basically the previous 5 years of coverage, if something happens, there's going to be no claim, there's going to be no coverage for it. So whenever you're dealing with a policy or going from company A to company B, the most important thing to always remember is for the new carrier to match retroactive dates. If it's a savings of $1,000, but there's no retroactive date, the retroactive date is going to be inception, it is not worth moving, because then your prior policies are useless if a claim comes in, because it's going to be after the reporting period, unless you purchase tail coverage there, which is a different thing. So always make sure that the retroactive date is goes forward when you move from one policy to the other.
So that's a question that they should always be asking if they're working with a new client that might have existing coverage. What is the retroactive date? So let's keep going. Okay, full prior acts coverage. So that goes right in line with this, because the retroactive date, is where we start here. And if they were starting the policy today, they could have, it could be the retroactive date would start the day that they start the policy. However, some carriers, and it varies by carrier, that will offer full prior acts coverage. Sometimes you can get it up front, and sometimes after years of having coverage, they'll give you full prior acts. But every carrier, again, is differently in this. So what do I want you to be aware of? Insureds need to be aware that allegations do happen where wrongful acts occur back to the inception date. So something that actually happened many years ago, and it could have been continuous, right? And you now, 5 years later, have knowledge of it, and written allegation and demand for damages, and this is when full prior acts coverage comes into play, because it goes back to the inception date of the company, and that is important for someone in business to have that full prior acts coverage. Anything else you want to say about that, Dan?
Yeah, most claims when it comes to a professional liability, I think aren't necessarily they happen. Usually a year after the event happens, someone decides to sue for it or bring a claim against you there. So that's why the retroactive date and the prior acts is so important I've seen claims happen where something happened 4 or 5 years ago, and all of a sudden now they're getting a claim on it there, and if they didn't have that prior acts coverage, there would be no coverage for it. So that's really important. Some carriers will let you buy full prior acts coverage back. Some will do it over a period of time, and some will just have a defined retroactive date and not go to full prior acts. But it all depends on the carriers that when it comes to the full prior acts coverage.
Thanks, Dan. That's good information. Okay, so let's talk about another important thing. And to be honest with you, this is one that I think confuses everyone. What's the difference between an E&O deductible versus an E&O retention? Okay, most of us are familiar with deductibles, and the definition of a deductible is the portion of the insured's loss or damages to be paid by the I got my little thing out of the way here. So before the insurer settles the claim. So, well, that's sort of vague, huh? It doesn't really tell you exactly when, and the truth is it does vary by carrier, but the intention is that, the carrier will come forward, begin to adjust the loss, and at some point will ask for the deductible, right? For you to pay your deductible. So let's take, for example, on an E&O case, usually it's a lawsuit, right? And you get assigned a counsel to defend the insured, and they reach their bill starts to rack up, and they reach maybe it's a $5,000 deductible. Their bill reaches $5,000. That might be a time that they might come back and say, okay, it's time to pay your deductible. You're going to pay the first $5,000. But they're not. The deductible is really designed. When it's a deductible, it's designed that you don't have to pay up front, but you will have to pay at some point during the process. You can make it really, really efficient by adding first dollar defense coverage, and that would make sure that the carrier takes it from beginning to end, and that your deductible would be paid at the very end. And that's a great coverage. Sometimes you have to pay an additional percentage of premium for it. Sometimes you can get it included. So Dan can work with you on that, all of those types of things. But those are good coverages to ask for. Dan, did you want to go? Why don't you go over retention?
Perfect. Okay, now the retention is the amount of the loss that will be paid by the insured before their insurance becomes effective. Basically, you have a claim, you send the claim to the adjuster signs the attorney. The first amounts that you're going to get are going to be those attorney bills. So basically, if you have a retention, you pay that attorney the first, let's say you have a $5,000 retention, you pay the attorney that first $5,000. After you've paid $5,000, then the insurance company will be receiving bills directly from the attorney who's handling your case, and the indemnity would be paid directly to the claimant against you from the insurance company. So you just pay that first $5,000. It's as simple as that.
Well, and so the downside with the retention, the downside is when you have a retention, the insurance company they demand that retention up front before they will even adjust the claim. So that's the downside with retention. So Dan's your professional liability underwriter, and he definitely will always be working to get a deductible with first dollar defense where he can, and then and if there may be a reason that because of the type of exposure that you're dealing with, that a policy with a retention might be the only other option. And that's something to always just be knowledgeable about, be able to talk to your insureds about. Okay, and let's keep going. So now we're going to talk about some claims examples and we picked 3 different ones so that you could get a feel for different types of consultants or E&O type of services, classes of business, etc. So we're going to start with consultants, and our example is a management consultant that is sued for alleged negligent consulting services, and the demand was $250,000 in damages, and that they alleged, that the client they had a financial loss, and they're a large chain of retail baked goods stores that were advised by the consultant to sell off their trucking unit, reduce distribution radius, meaning their delivery radius per store, and then concentrate mainly on baking and packaging. So the trucking company demands more money for services. It was sort of maybe a bad call on the management consultant's part, and whether it is or not, it's an allegation, and and this caused a serious financial loss for this company. So that's a perfect example of a claim. So let's take a look at some questions, because Dan, our expert, is going to be talking a little bit. So did a professional duty exist, Dan? And what was
Yes.
that professional duty?
Okay. As mentioned before, a professional is held to a higher standard. They are the expert. They're held to a higher standard. The bakery went to the consultant to find the most cost-effective way to deliver their goods. The consultant told them, we're going to get rid of the trucks, we're going to do this, we're going to do that, we're going to brokerage everything out, we have trucking doing, you're not going to have those costs and so forth there. So as a result, the duty was breached because their advice, their information, their expertise caused a financial loss to their client. If the client didn't listen to them, they would not have suffered a loss and there's a direct connection between what the consultant told their client and the financial injury that their client received, based on the fact that they told them that we're going to do this with the trucking. We're not going to have our own trucks. We're going to subcontract everything out. And as a result, that ended up costing them more. So the consultant is actually liable for that and that's why there was a judgment against the consultant on this example.
Okay. What other types of consultants do you commonly see, Dan?
Well, right now, we're seeing a lot of human resource consultants, a ton of technology consultants. They're like this one here, a cost containment management consultant, marketing consultants. We have a lot of energy consultants, consulting on different energies and so forth there. And green consultants is another one that is really hot right now. Those are the ones who will tell you how to make your business greener, more environmentally clean and so forth there. Okay. So we can write a wide variety of consultants.
Wonderful. So here's our second example of a claim situation, and we elected to take a look at an architect and engineers type E&O policy. So what we're going to find here is that there's some things where the coverages start to become needed coverages for these types of classes of business become more unique, and so it's important. That's why they usually create special policies for different classes of business. So let's talk. I'll briefly go over this, and then we'll ask Dan some questions. So it's an all-encompassing claim. A pedestrian was injured when a wall which had passed inspection collapsed. A pedestrian filed suit against the property owner, the developer, the contractor, and the architect, everyone. And even though the wall had been signed off by the building inspector and the owner's staff architect, the design firm's policy covered their portion of the liability. So so this one's an interesting one. So Dan, would you like to answer some of these questions for everyone and talk about contingent BI and PD?
Perfect. Yeah, on this claim, which is unique for an architect and engineer compared to, let's say, a consultant or a real estate agent or an insurance agent, is that the resulting damages were an injury and property damage. Their injury and property damage is 100% excluded on your miscellaneous form, your standard E&O policy. An architect and engineer's E&O has what's called contingent BI/PD. What that is bodily injury and property damage arising as a result of your professional services rendered. Now, on all GL policies, professional services are excluded there. So why do architects and engineers need both the BI and PD on their E&O is for the fact that their claims, their wrongdoings, their negligence is going to cause, it'll cause a financial loss like a consultant, but it's also potentially cause an injury and property damage. So the E&Os, the A&E, architects and engineers, also construction managers fall under this classification. Their policies actually have the bodily injury and property damage for professional services, and they're built in with the contingent BI/PD coverage.
Excellent. Well, so it's important. That's why their policy forms have a contingent bodily injury and property damage coverage, and that is important because their exposure is greater, so they need a combination of coverages to be able to cover to insure them. Okay, so let's try another one. Okay, so this is now we're going in a different direction. We're talking about miscellaneous medical claim examples. This is a private home health care. All of us baby boomers are, getting older, and so these are popping up everywhere. And so we've got a developmentally disabled adult. So this is the risk that has a professional liability exposure, but again, it's another one of those combination ones. So we have a developmentally disabled adult lived with his family, but required around-the-clock assistance with activities of daily living. He's nonverbal, which became the problem in the situation because he was unable to alert his caregiver when his bath water was too hot. The resulting burns. We had a required medical attention and aftercare. So this is a bodily injury again that we're seeing related to a professional exposure, professional services. So the patient's family sued the nurse and the agency alleging negligence. So let's take a look. Dan, would you like to talk a little bit about this one?
Yeah. Well, first of all, there's a couple things that are going to be unique to miscellaneous medical risks. The results are going to be injuries. If just like a doctor's malpractice or a surgeon, any one of your miscellaneous medical risks, the result is injury. Obviously, on miscellaneous standard E&O for like a consultant, those are excluded there. And then you also have financial losses and pain and suffering and things of those natures that are part of a miscellaneous medical claim there. And we look here that there's actually two parties that can be named in the lawsuit there, where we have the service provider and the actual caregiver can both be named on the policy. Usually on most policies, by the definition of insured, the company that's providing the services is covered, and all of their employees, even independent contractors while working for them, are going to be covered on that. The thing that we want to be on miscellaneous medical is there's a fine line of what's between GL and professional there. This was a professional act, but you can also consider it GL there. The negligence is what's actually going to trigger coverage. And most miscellaneous medical policies, we try to write the professional and general liability together. This way, that fine line of what is professional, what is general are connected, so you don't have to worry about which one is which. So the one carrier saying we're not going to cover it, the other because it's a general liability claim, and the other one say, wait a second, it's a professional, because the professional excludes the GL, and the GL excludes the professional services there. So that's why on a lot of miscellaneous medical, we try to write it on what's called a combo policy, where it has both the miscellaneous medical and the GL coverage.
Good idea, Dan. That's a really that explains it really well. Thank you. Mm-hmm. So last but not least, this slide is about your E&O coverage exposures as insurance brokers. So making sure that you are offering all the other professional liability coverages that are needed and paying attention to them. Employment practices liability, you're more likely to have that type of claim than an E&O claim these days, depending on what state you're in, and that's a growing exposure in all states now. Cyber liability is, that is here to stay. It's just a matter of people understanding it and then being able to keep up with the different types of cyber breaches and events that are happening. Pollution liability, environmental liability go hand in hand sometimes with some of your architects and engineers or construction management professionals, and so don't forget to make sure you ask about these exposures when you're dealing with your insureds. So that's it for today. I want to thank you all for joining us. And did we have any questions? I did not see any questions today. So please visit our website and take a look at all the tools that we've got there. The webinars will be posted on our site. There's lots of webinars that you can go and watch as if you were attended today. So I encourage you to do so. And please take our survey. Dan's ready to take your applications. You can send them to submissions at CID Insurance, and you can copy Dan as well, so he gets an early view of what you're sending in. And thank you again for joining us. We look forward to doing some business with you.
Okay, so I see there's a question here. What is the difference between a retroactive date and full prior acts coverage? The retroactive date is the date that coverage will go from that point over on. So usually the inception date of a policy is a retroactive date, whereas full prior acts coverage is actually the retroactive date. So it goes to full prior acts coverage will cover the insured from the time that their business started, whereas a retroactive date starts from the time that they would be covered from the time that the policy started. So that's the difference between the two of those. Are there any other questions? And if you do have any questions, you can just email them to me also, and I can get the answer for you. And if I don't, I can contact one of my underwriters to get any questions that we have.
Great. I'm glad you caught that question, Dan. Thank you. And again, reach out to Dan if you have any further questions that don't get answered here. But Dan's a great experienced underwriter, very responsive, and very good at placing professionals. So I encourage you to work with him. Thank you all for joining us.
Thank you.